On January 27, Hindenburg Research, a New York-based investor research firm that specializes in short selling, released a report accusing the Adani Group of stock manipulation and accounting fraud. This led to a sharp decline in Adani stocks, with 5 of the 9 listed group companies hitting the lower circuit, resulting in a loss of 3.37 rupees lakh crore, approximately $46 billion, in the group's market capitalization. Over the last 2 trading sessions, on January 27 and 29, the Adani Group has lost 4.17 rupees lakh crore, approximately $57 billion, in market capitalization. The Adani Group announced plans to sue Hindenburg Research for their maliciously mischievous report. The sharp decline in Adani stocks also coincided with weakness in broader indices, with the BSE Sensex falling 1.45% and the NSE Nifty declining 1.61%. The slide in broader markets, which was triggered by the hammering of Adani stocks and bank shares, has raised concerns within the Indian government, given that this comes just days ahead of the presentation of the Union Budget on February 1. Additionally, the hammering of Adani Enterprises, AEL, for the second day has raised question marks over the company's 20,000 rupees crore, approximately $2.7 billion, follow-on public offering, FPO, given that the over 18% slide in the shares of the company means that it ended the day at a 11 to 15.5% discount to the FPO price band. Gautam Adani, the chairman of Adani Group, also saw a significant decline in his personal fortunes, slipping to 7th on the Forbes billionaires list with a $22.6 billion decline in his net worth. Market participants linked the Sensex fall to the overall weakness in foreign portfolio investment, FPI, participation in Indian equities over the past couple of weeks. Compared to FPI inflows of 47,358 rupees crore, approximately $6.5 billion, seen in November and December, there has been an outflow of 17,000 rupees crore, approximately $2.3 billion, by FPIs in January. On January 29, the FPIs sold a net of 5,977.8 rupees crore, approximately $818 million, in the domestic capital market, the BSE's provisional data showed. Analysts say some banks with exposure to Adani Group companies have come under pressure because of the fall. For example, the State Bank of India, SBI, has seen a dip in its share prices by over 9% over the last 2 trading sessions. Public sector banks are more impacted compared to private banks owing to their high exposure to Adani Group companies. Multiple analysts also say that markets will stabilize over the next few days following this broader correction, which has made some quality blue-chip stocks cheaper, making a case for investors to make a fresh entry.